Hey, everybody, and welcome back to Arizona's monthly housing market update. I'm Katie, and
I'm Matt, and
I'm Ryan. Welcome back, everyone.
Hey, team.
Hello.
April was an interesting month, was it not?
Oh, yes, April
A lot going
Fools, a lot of tomfoolery. Yes.
There was a lot going on. Just speaking through the industry to colleagues throughout the industry, April was a very, very busy month. But we also have some interesting news to share, interesting data to share that came out of April. Which, interesting was a good word. So let's just hop right into rates as we always do. First, take it away, Mr. Gilliam. What's cooking over there in rate world?
Oh, man, a lot since our last recording. I think it was on April 3rd. So, of course, the big news, I know we'll discuss it, were the tariffs being announced by President Trump and the retaliatory tariffs back, mainly from China. And, this did cause a steep sell-off in the stock market. And mortgage rates, they did jump. Usually when the stock market sells off, mortgage rates do improve, but rates, they did get worse. And really, it was the fear of price increases with the tariffs and the impact that could have with inflation. And, as we discuss a lot on these updates, higher inflation, results in higher mortgage rates. But, since about mid-April, we've seen a rebound in both stocks and in rate improvements. And this is mainly because, we're seeing a slowdown in the economy. We're starting to see hiring slowing, consumer spending and confidence has been showing it as dropping. And we just got the gross domestic product this week, and it was for the first quarter. And this is, again, the total goods of the value of goods and services produced in the U.S. And it was a negative. And if we get a negative GDP reading in the second quarter, then we're officially in recession territory. But the silver lining to all of this, that the reason we're seeing improvements in the markets is the fact the Federal Reserve may need to be more aggressive with their rate cuts this year. It's highly predicted that during their May 6th meeting that they're going to continue to pause rate cuts. But, the Fed's main job is to keep employment strong. And with the rise in unemployment, they may have no choice but to drop rates sooner and act at a more accelerated pace. So this hope for lower, Federal Reserve funds rates, lower mortgage rates, and even possible trade deals, of course, has really, caused some more optimism in the market over the past couple of weeks. So we're hoping to see this new trend lower in mortgage rates to continue.
Yes, that would be wonderful because we know that a lot of our buyers' demand is rate driven. So that would be good for our sellers to have a bit more buyer demand out there. I'm hearing a lot of tariff talk, hearing a lot of people sort of freezing, not really sure what to do, not really doing anything. Matt, anything come to mind on that?
Yeah, and it's just so difficult because at the end of the day, we kind of beat this drum every time we talk. It's the news, and you listen to the news, and it's we've always relied on the news being the news, something that's going to deliver you information that's going to enrich your life. And it's not the case. And it stinks because as an individual, you need to read between the lines, look at multiple different news, and try to figure out where it actually the truth lies. And it's usually
what's biased, what isn't.
Yeah. And with tariffs right now, clearly, they're happening. There's effects that are happening. And we have a giant opposition right now. We're seeing, a lot of pushback against Trump's tariffs. And that's really the leg that, the opposition has to stand on. There's really no solution. There's nothing really else to kind of deliver and say, hey, this is what's good. So they're really doubling down on this whole, it's bad, fear. And the regular person is kind of like, well, am I feeling it? Maybe I am. And they're going to kind of err towards that. The thing that I really kind of want to push is that, we're hearing this at the first 100 days. The first 100 days, things aren't better. They're supposed to be better and all this. And yeah, it's politics. People are going to say things and do things. But the truth is, when we really look at this, and I think a lot of Americans see this, is when we're trying to change something, we have, $30 trillion of debt. We are clearly doing something that is not working. And if we keep doing what we're doing, we are going to have big problems. And that's just the bottom line. And if we keep doing the same and expecting different results, I think Einstein's theory on insanity is right there. Yeah. So we have to do something different. And I think we all know in everyone's personal lives, if you're going to make a big change in life, it takes time. It just doesn't happen overnight. If you're going to go on a diet, yeah, you might see some effects the first week and feel better, but you actually see regression and stuff the second and third week. And they say you got to be powerful and push through that. You really don't see the results till 3 to 6 months.
Yeah.
Same like if you're getting off drugs or something like that. You mean what, 14 days to get it out of your system, but it's 6 months to a year to really get your mental ability back and such. So for everyone to think that we can change the most complex economy at a global scale in 100 days is unrealistic. And I think most people are seeing that. And you've got to kind of look to the positive side of things. And I think it's there. And that's just on a lot of things that Ryan just said on how rates are being affected and didn't really expect it. But at the end of the day, there's still a lot of good numbers and a lot of good indicators that things are okay. So.
Yeah, and as far as rates are concerned, Ryan, are you having conversations with buyers? Are you seeing requests for rate buy downs come in? I am not having these conversations. It seems like buyers are just kind of like, okay, that's the rate and that's what we need to do, and we'll just move forward. I'm not seeing a lot coming in on my listings of requests for rate buy downs anymore. Is it becoming less and less popular?
Yeah, we're seeing it. It kind of depends on the buyers, but we're seeing a little bit half and half right now because I mean, we did see applications drop actually. I think it was 17% last month, and kind of like Matt was saying, it really just kind of a little bit of the fear of the volatility that are keeping some buyers at bay right now. But when people are fearful out there, remember what the great Warren Buffett always says: be fearful when others are greedy, and be greedy when others are fearful. So I think some people are really seeing that it's a great time to buy right now. And the ones that are, they're taking advantage of a little bit more inventory and less buyers, not necessarily getting concessions, but maybe getting a little bit more of a better deal on the price. So you could just look at the NASDAQ, for example. During the peak fear, the composite dropped to about 15,000 last month in mid-April. But smart investors out there, they knew it was time to buy. And right now it's close to 18,000 in the NASDAQ. So it's interesting when you kind of see these moments where there's peak fear. Sometimes it's the best time to get in and get some deals out there.
I completely agree. There are a lot of buyers that are getting great deals right now. We did see a pretty sharp decrease in the monthly median sales price. It's declined 20 grand over the last 5 weeks, which is pretty sharp. So we're seeing that there's a downward trend in home pricing. And of course, we've got the hottest months of the year upon us. And, I suspect that it'll be a bit slower through those months, unless, of course, something crazy happens. What do you think about that, Matt?
Once again, it's hard for me to look at it and say, hey, is this really an indicator of what's really happening and what's to come? And the reason I even say that, we talked about this on other podcasts, what is our inventory mostly made up of right now? And what we see happening is if you are in a position that you are forced to sell, clearly you have no other choice. You have to sell, you have to deal with the market conditions. Now, if you're in a position that your home is turnkey and you have the ability to fix it up and make sure that it's ready, you're going to see better results. You're going to actually see not that big of a hit. But a lot of these properties that have been coming on the market in the last 3 months are not that. They're homes that do have a lot of deferred maintenance, homes that need new roofs, homes that need new air conditioning systems and such. And both those 2 ticket items right there in today's world is you're looking at about 30 grand. And that's where I see a lot of people hitting sellers and saying, hey, love your home, love the price, but at the end of the day, it needs a new roof or a new air conditioner. I'm going to need some concessions, or I'm going to need a price reduction. And that's what we're seeing. And once again, I think it's really kind of based off of what we're seeing in inventory. So it's really going to be what the seller's able to do. I think we're going to see things kind of backing off. I think a lot of people that know that, hey, things are softening, maybe it isn't the time to sell our home and put it on the market if you don't need to.
Yeah.
Maybe they do turn it into a rental like we saw back in 2022 when we saw that sharp rate change. So the other side of it is look at the rental market. The rental market's actually solid right now. The single family rental market. So if we were really seeing Arizona economic issues, we would see it there first. That would mean people are moving out of the state. People are staying put. They're not trying to move into something else that's bigger. And that's not the case.
Totally agree. And I'm, speaking to sellers, I'm just going to rip the Band-Aid off here because you kind of started it, but you're absolutely right. If you don't have to sell, or if, there isn't something huge happening for you or whatever, probably you may want to reconsider. You may also definitely want to reconsider if you're highly emotional about your property. Now is not the time to be emotional about properties, guys. You are going to get potentially lowballed. You are going to get a buyer come in and want to really negotiate with you. I'm specifically seeing that happen with the sellers that still have the pie in the sky list prices, still have those numbers that are just too high. They're kind of chasing, prices down. And that's not really beneficial, is it? We just had this conversation with the seller the other day, didn't we?
Yeah. And it's tough. And I think any seller could be looking at us and saying, well, it's not your home. We understand that. We have property. We're also emotional creatures.
Right.
So I can totally understand where sellers have this idea of what the value of their home is. And to all of a sudden, kind of hang your hat on that number and not really check it. And then all of a sudden you're forced to check it in a reactive manner. Mm-hmm. It's a shock to the system. And I think a lot of sellers do, when they learn that information, they kind of go into the basic primitive state of fight or flight. And, and it's a difficult position to be in. And exactly like you said, Kate, I think you should really assess if you're in that position, you don't really need to sell and you do find yourself to be emotional, and at least try to find some logic, look at the numbers, rationalize, speak to a professional, make sure you're validating these feelings, validating this logic, instead of just letting it kind of go in your head, maybe looking at the news and just using that, because that's going to set you up for even more disappointment.
I totally agree. I think it's so important always, but especially right now, to make data-driven decisions.
100%.
And data and your full range of data, guys, is not comparable sales. That is not the be all end all. That is not the full story. Even if they're within 90 days, an exact match to your property and next door, it is not the full story, guys. It's specifically, because it's the conversation that I had the other day too, comps from 2 and 3 years ago are not comps. No. That's not going to enter any of my reports, just so you know, when I'm delivering data. Those are not comps. We're in a completely different market than we were 2 and 3 years ago. Totally different. And I think that it's very important to get the broad scope of what's going on in terms of what's happening today. What are buyers doing today? That's why we love this podcast, and we love pushing this podcast out, because it helps you guys understand, because we share it. What are we seeing boots on the ground? This is what's happening today.
Yeah. And and to the people out there that are considering selling and they might not have that chosen realtor, and they're saying, hey, I'm going to go ahead and do the interview process, which a lot of people do, they have to be very, very cautious, because right now you could probably go out and have 3 to 4 different interviews. And if all of a sudden you're seeing 2 of those, let's say 2 of the 3 are saying a lower number, and you get the one that says the higher number, your brain and you're going to want to say, oh yeah, they know what the truth be told is, I would really, really be critical of that, because there's also a lot of realtors out there that are struggling, and they know that whatever they can tell you to get you locked up in that agreement for that price, and then backpedal and tell you, hey, we're going to have to drop the price. They're doing that. And guess what that does to the seller? It makes them emotional. It pisses them off. They feel like they're and rightfully so. So that's where I'd be extremely critical of anyone that does come off to have a price that's way higher than what anyone else is saying, because there's probably some stuff that needs to be looked at.
100%. And in fact, we rescue a lot of people, you know that as well as I do, that have listed with other agents or whatever. And we have several rescues that are coming up as we speak. And these are conversations that we're having. It's like, hey guys, here's the data. You're going to get more data from me than probably you ever imagined or dreamed for. But it's really, really important. I'm very data driven. I want you guys, I'm speaking to sellers out there, I want you guys to see what is going on and what we're looking at and what you're up against.
Yeah.
It's so important. And those that don't deliver data are doing you a disservice.
Yeah.
Those that look the other way and you know, like you said, Matt, get y'all excited. Oh yeah, your house is the best in the whole planet and we're gonna, you know, make millions more than your neighbors. Really, really big red flag right there.
100%. 100%.
You know what's
Values.
crazy?
Values
Right.
are a big thing. And what's one of those things that indicate values? And that's something you deal with, Ryan, and that's appraisal.
Absolutely.
And that's something here that, you know, is an indicator. And have you been noticing any under appraisals or more than, or just?
Yeah, the past couple of weeks we've seen a few appraisals come in slightly lower, like what Katie said with some of the softening and pricing. I know, Katie, you saw the a VA Tidewater notification, which we haven't seen in a long time. You even forgot, you know, what that meant, like Tidewater. Oh yeah.
I got my very first Tidewater yesterday in a long time. Which is really weird because I believe just this last podcast that we were on, we were saying, hey, appraisals are coming in higher because they were.
They were, yeah.
But these past 5 weeks, we have seen some sharp changes in the data. And for those of you who don't know what a Tidewater is, Ryan can probably be a little bit more eloquent about this, but it's basically a VA buyer that we got the appraisal done on the property that they're purchasing. And the VA appraiser's like, hey guys, I think we're going to come in light. Can you send me some comps or can you send me some support for your price?
Yeah, they give you an opportunity to support the price. So maybe I'm missing something. If you have some comparables that support this price, send them over before I finish my report. VA is one of the few that actually does that. If you do conventional or FHA, you just get the report and have to fight it afterwards. So it's a nice, you know, I really enjoy that because it gives you a chance to really dispute it before getting the report. But yeah, we have seen some values coming in lower, especially with some of our clients that are moving forward with refinancing. So it's just an interesting time in the market where we're really kind of in this shift. And so I think, you know, I'm glad that we're always doing these recordings. I think the next month is going to be a lot going on, and I'm optimistic about a lot what we're going to see. You know, maybe the Fed will drop rates. Maybe they'll give indication that they're going to be doing it sooner or speeding that up. You know, maybe there will be some deals done with some of these the trade war that we're in right now, and it's going to be incredible how quickly things could really shift. Really, you know, one day we could be in a buyer's market, and then next rates drop and shift quickly into the seller's market. We just don't know. Yeah.
Well, 100%. And we're seeing that in the stock market real time.
Yeah.
You know, I mean, you really feel like the sky is falling one day and it drops all these points and then next day it's back. And that's exactly what we've been doing now for the last 30 days. If it was really sky is falling, there would be no back. It would be just negative trend down. So I definitely feel that that's the case. And I do think the Fed, I think it's interesting, and once again, people are probably going to say, take your tinfoil hat off. But like, as much as they say, you know, the Fed is supposed to be non-biased politically, I don't feel that way. I look at, you know, even how the Fed reacted to raising rates the way he did in 2022, where there was a lot of economic indicators in 2021 that said he could have started doing that. That it was actually ready and it wouldn't have been such an abrupt shakeup. But when you really look at it, what happened in 2022 and why was it so important to push it as long as they could? Midterms, you know, so it just really, it kind of bothers me when he says it's not rates, he can't do adjust. So I think at this point, what the administration's doing is they're pretty much putting this political pressure that's going to inevitably put him in the position to lower his rates. And that's what the tariffs are doing right now. And I think, like you said, all those indicators that say, hey, this is time to at least start talking about rates being lowered should be happening.
Yeah. All right, guys. Anything else before we go? That was a lot, but do you have any more?
I think we covered it.
I think so too. Well, thank you all for being here once again. We absolutely love this podcast. We hope you do too. We've been here for years now. So if you want to check out any of our previous episode, hop on over to our YouTube channel. It is at Team EvoAZ. That's our handle. Scroll down just a little bit. You will see the playlist for the housing market update. It's also a podcast as well on YouTube. So you can click to get notifications there and follow that. If you prefer podcast style, maybe you're a Spotify person or an Apple podcast person, on your favorite podcast platform, do a quick search for Arizona Real Estate Radio. There you'll find us. Please like, follow, download, all the things, and we will see you next time. Thanks, guys.
Everyone.
Bye, everyone.